what we do want to talk about, of course, Nvidia. Those shares still under pressure, clawing back some of the downside pressure that we've seen. That stock looking like it's down about 2.5% as we head into the market open in about 30 minutes time. More experts comparing this recent AI craze to the dot-com bubble of the early 2000s. Joining us now to discuss, we have Patrick Moorhead, Moor Insights and Strategy Founder, CEO, and Chief Analyst. Patrick, it is always a pleasure to speak with you. You are the foremost expert in this space, I like to say, so I appreciate you coming on this morning. There's this question out there, comparing Nvidia to a Cisco. You've been in the game long enough. Talk to me about your take on that comparison.
Yeah, so I grew up in the dot-com era. I think I was about 10 years into my career, and there are definitely parallels, right? Cisco was the driver and the builder of the infrastructure for the internet age. And there was overinvestment in this space. And NVIDIA is clearly one of the biggest builders for infrastructure of this generative AI days. And we do need to be very careful and look for what I call the precursors of something that could pull back. Now, first off, I don't see anything changing for 6 to 9 months, but we do need to look at the downstream profitability that people in the ecosystem are making or not making. These are the software companies like Adobe, Salesforce, SAP, and ServiceNow, because if those enterprises and those consumers aren't paying more for those new AI features, then this whole gravy train comes to a screeching halt, like we saw in the internet bust.
And so all these things considered, what is NVIDIA going to need to continue to prove on a sequential basis at this juncture that's going to be critical to cement this broader story that they've been able to sell the markets on?
Yeah, so growth, it's growth, and more growth. And this next generation of NVIDIA growth, the new growth, will be all about the enterprise. 80% of data for companies and businesses is still on site or on the enterprise edge. So what they're doing is they're enabling companies like HPE, Dell Technologies, and Pure Storage and Lenovo to build that out. And this week, I actually personally attended the HPE and the Pure Storage event. This is what it was all about. This is the second layer of this data center build out.
Well, and it's interesting, in your notes to us, you explained that this is a private cloud play. How bullish of a signal is that for the chip sector in general, but specifically here for NVIDIA?
Well, it's very positive. First of all, there's a little bit of a diversification of risk, because if the only enterprise AI plays are in the public clouds, then it's pretty much winner take all. And I view this enterprise play as there's something really here. And then what you do is you have the VMwares that's owned by Broadcom, the Red Hats of the world, IBM software, and even software from HPE that will get a lift and a juice from this infrastructure build out. And here's the thing, that the enterprise data center play is more durable than, let's say, the public cloud play. It's kind of the gift that keeps on giving. So if NVIDIA and its partners can stick this landing, and enterprises can start either leveraging the benefits from enterprise SaaS companies like I talked about, or building their own, then this is going to be a 5 to 10 year run. And maybe we won't see the dot-com bust like we saw decades ago.
You mentioned all the players in the space, Patrick, and it makes me think about the competition of it all. I'm curious if you can talk about the biggest risk to NVIDIA when it comes to pricing power on its chips, and just give us some context on, the pricing of NVIDIA's chips versus some of their competitors.
Yeah, some of the earlier data center chips that NVIDIA had, they might sell for $5,000, $10,000 a piece, but now we're looking at $30,000 to $40,000 per chip, and that is astronomical. It's probably over 1,000% gross margin. But the longevity here, so you've got two levels of competition. First, you have the merchant silicon providers, the AMDs and the Intels of the world. And then you have the homegrown ones, from AWS, from Azure, and from Google. And what it is a race right now is NVIDIA is trying to get a lock-in through their software. I do believe that chip makers and AMD in particular have come up and have as competitive or almost as competitive chips for training. 100% there are competitive chips for inference, but it's that software lock-in that's referred to as CUDA or NVIDIA NIMs that NVIDIA is trying to stick. So regardless of who has the better chip, you have to go with NVIDIA because of its software.
Yeah, eventually every dinner table is going to know about Compute Unified Device, whatever the A stands for, but
Right.
applications, something like that. But anyway, at the end of the day, and I'll look that up and give that back to our viewers here.
Yeah.
Architecture, that's what it is. But anyway, all these things considered, Patrick, it's been one of the most overcrowded, or de facto, as Goldman Sachs has called it, AI trades here. So as we think about NVIDIA going forward and the 10-year horizon that you were just looking at, I mean, we're right now in the ballpark of a $3 trillion market cap. What do you think it could get up to?
I don't see any reason it couldn't get up to 4 trillion. And again, a lot of this is based on expectations because you look at PE, it's pretty astronomical, right? And if we can see some positive signs from the downstream players, because other people have to make money, not just NVIDIA, again, otherwise this comes to a screeching halt. But I don't see any reason why this couldn't get to 4 trillion if we continue to see those positive signs down in the channel, and we keep seeing positive news coming out from NVIDIA with its partners.
Patrick Moorhead, who was the Moor Insights and Strategy Founder, CEO, and Chief Analyst. Patrick, great to speak with you as always.
Thank you, Brad and Maddie.